Okay, so what you're watching right now is Espresso, newly listed layer 2 token. Low float, high FDV, fresh listing on Binance Futures, Bybit, and even Coinbase Spot. It was an obvious short, and that's exactly why it's squeezed. Let's break down what actually happened here. We are going to talk about this 60% short squeeze that happened on this coin. So, yeah, first we are going to check coin market cap and some stats. So, market cap is around 36 million. You can see at peak it was close to 50 million, but that's not the important metric. The important metric is FDV, which is around 250 million. That means most of the supply isn't circulating yet. Low float, high FDV. These types of tokens move aggressively, they squeeze hard, and they usually fade hard. Now let's check derivatives positioning. Yeah, so I'm using CoinGlass for this, and basically three things that caught my eye. The first one is market cap and open interest. Let's say like the whole derivative market. The ratio between those two metrics were at one point 1 to 1. When we peaked, it was like 50 million, and the market cap was also 50 million. So basically, I can translate this as there is enough fuel that someone will be caught off guard on derivatives, that we will get the sharp move, and then it will basically dies off, because it will be mainly derivative driven, so there is no real spot demand. So you can like basically join it before you can like somehow find the edge, or find to join the squeeze, or just wait till everyone in the books will get liquidated, which happened here, and you can just fade it, and you can fade it then after on positive funding. So yeah, also we will check that. Basically, from the moment it was listed on a perps, you can see the market is right. This coin is going down, right? But after the listing, the funding was like 0.01% on average. So the shorts were paying longs, and you just knew that market is net short. So this was just ticking time bomb. Also, you can see if we look at the liquidations. So this is where the short squeeze happened. You can see there are like 2 million shorts liquidated, on that day, which is enough fuel to make on such a liquid, a liquid coin to make 60% move in a day. So that's the stats. Now we will look at Velo, which is great charting, software, you can call it. You can definitely check that out. And here we will explain the move from the order flow perspective and indicators I'm using. So basically, we will start here. So it got listed on a Binance futures or Bybit, and from that moment, the price is going down. Basically, it's going down. Open interest is going up. This first column, open interest is going up, so the new contracts are entering the market. The perpetual CVD, cumulative delta, is going down, so basically it's telling you that there are more aggressive market order shorts entering the market, slamming the books. So basically this all new open interest entering the market are directional shorts aping, and they are getting confluence with heavy spot selling. There's a spot CVD that was basically selling into the books from the moment it got listed. So this is very, very bearish narrative. Also, the funding, as we talked about, was negative all the time. We got quite some liquidations on a long side, and at one point, after we got the correction of like 40% from the listing, we created inverse head and shoulders, you can call it, or whatsoever. So we created a range, we reclaimed, and basically there were trap shorts, and it started. This is like the first short squeeze. You can see basically the liquidations here, and now it was the ticking time bomb. This is first where open interest was starting going down, and then we got the sharp move. And what is interesting, it was initiated here by spot, so someone in the spot books start moving with the price, and you can see it on a spot cumulative volume delta here. And also you can see that perpetual cumulative volume delta indicator is going also non-stop up. This is mainly shorts closing, but also directional longs opening. And yeah, uh, the main confluence is this huge liquidations. You can see basically this move is just fueled by liquidations, and everyone got off guard. And right now, I'm actually in a trade, but I just don't want to talk about it. It's not the main point. The main point is, if you like miss this, I did, that you just know that the momentum will just fade after the pump, because it's mainly derivative driven. So after the positions are liquidated, they are caught off guard, you know, the momentum slows down, and you can just comfortably enter the short. Basically, I didn't enter right, here or here or here. My opening position is around here, so I'm in a like slight profit. But you know what I'm thinking is basically we are taking these lows we created it. I think it can happen, but basically, you can short it after such a squeeze. Basically, if you would just start looking for shorts after these huge liquidations, so we are talking anywhere here, if you would get better timing than I did, then this is basically great setup, because you can enter here. Your stop would be above the squeeze high of the shorts, and you would be just targeting the levels before the squeeze. So yeah, so that will be everything. Thank you for watching, and have a good one.